Welcome to Blockchain 2025. We explore how blockchain technology will affect major industries in the future.
Each episode dissects one industry, how it currently works, why blockchain can disrupt it, and some blockchain projects trying to be the solution.
Blockchain 2025 is part of the Bitcoin.com podcast network. Learn about Bitcoin, create a wallet, and buy your first Satoshis all at Bitcoin.com.
Welcome to the finale of Season 1 of Blockchain 2025. This is Matt Aaron.
And I'm Nick Cottonero.
Nick, how you doing, man?
I'm doing well. How about yourself?
Good. You know, Nick, we were talking about before the show. I'm feeling really good about not just the show, but, Bitcoin.com in general. I know you have Coineries as well, but this is kind of the down season because of, we'll call it the crash of the price of Bitcoin, but just learning, creating great content, and connecting with people in the space. It's helping our knowledge because when there's these price booms, you know how it is, man. There's like this mania and it's a little bit more difficult to focus and learn.
For sure. Well, I look at all the blogs that are updating less frequently, all of the YouTube channels, which are no longer posting videos, the companies who are continuously putting out great content, like us right now on this podcast week after week, they are going to be the companies not only to look at in the short-term, immediate future for success, but they're going to crush the companies that took the foot off the gas.
For sure. Yeah. And it's funny because this could be, I don't know, this summer or 4 to 6 months, but only in crypto do you call half a year the long game. But it's a new industry and we're still trying to figure this whole thing out. But today's episode to finish off season 1 is pretty exciting. It's a meta episode. So Nick, what industry are we covering?
Today we'll be talking about currency and money on the blockchain.
Great, yeah. So I will say, just to define terms here, I'm going to define money as something that has store of value, whereas currency is everything except store of value, meaning that a lot of people would argue that a lot of state-operated currencies, meaning the US dollar, the Argentine peso, etc., may not have store of value. And this episode, Nick and I will probably contest each other on a lot of things. And think of it as a conversation about currency. This is not the definitive guide, but it's a way to get you thinking about digital money. So Nick, my first question is, you invest in real estate, and there's no doubt that recurring monthly revenue is a factor, but sometimes just buying a house, I almost think that people buy real estate, which is a limited resource in terms of, there's only so much land in the United States. Real estate's almost a hedge against the dollar because the dollar can be printed and there's inflation.
Well, when it comes to currency and the statement you made earlier, I do look at currency, the US dollar, as a store of value. Cash is still king in my world, and it's all about the Benjamins. I look at cash as a vehicle to purchase real estate, and as we know it today, it's still the major on-ramp to purchase cryptocurrencies. So cash, without a doubt, is a store of value. The question is it a good store of value or is it a poor one?
So yeah, and Nick, I guess based on my definition, store of value, and we won't get too caught up in these terms, right? Because, currency and money, there's a lot of context to these terms. I guess what I mean to say is, for me, my definition of a store of value would be something like gold in the sense that you could buy some in 2000 and it would be worth more today. Whereas if you just hold US dollars, you can't really store it. You kind of have to make it work. You can't have all your money in cash. You can't have $100,000 or $1 million in 2000 and wait till 2040. That $1 million, because of inflation and because they're printing this currency that you own, will be worth less.
I agree with you on that.
Cool.
It's safe to say that over the course of time, the dollar, as we know it, has less purchasing power. So if you're letting cash just sit idle in a bank account and you do nothing to it, it will likely buy you less in the future.
Yeah. And when it comes to government printed money, just fiat, and what we mean by that is the US dollar, the euro, any state-backed currency, all of this money, you don't have control how much your government prints, and they can devalue your currency. 18 months ago, the Prime Minister of India announced that 500 and 1,000 rupee notes would be taken out of circulation. So a lot of people lost money then. And obviously you've seen what's happened all over the world. A lot of currencies have been devalued. So all your hard-earned savings go down the toilet. I think that's one of the central arguments for Bitcoin. But Nick, I think that obviously the US dollar has done a pretty good job, especially compared to other countries. But you look around the world, man, people have seen their savings wiped out because their currency lost all of its store of value.
I'm coming from a place of bias, obviously. For me to say that cash, fiat is a store of value. It's completely tailored to the situation that I'm in right now as a citizen of the United States. Just take a look at Venezuela. It's rough out there. You're at the mercy of a government dictating how much currency is printed, what it's worth. It's brutal out there. So for myself, I'm coming completely from a place of bias right now.
Yeah, and I think we complement each other because you have more of the US view and I tried to add the international perspective. But when it comes to the current state of currency, what else is important? We've talked about store of value. What about just fees to the consumer and to businesses for sending payments?
I look at it as it needs to be readily available for spending and it needs to be accepted by merchants. The process to exchange needs to be very simple. If we're just looking at cash and coin in the physical form, it's very easy to generate a transaction. You can make change pretty easily. And in those types of situations, there are often no fees attached. So whether it be a debit card, a credit card, physical currency, or cryptocurrency, one of the main drivers is ease of use, availability for consumers to spend needs to be accessible, and merchants should be in a position where they're welcoming that currency with open arms. And I know we've talked about American Express in other episodes, but if we can make a parallel very quickly, there are still many businesses in the United States that reject accepting American Express purely because the fees are higher.
That's right. And the merchant, we talked about this in the debit cards episode, but merchant fees around 2.7%. That's a lot of money considering the technology we have today. The current system does allow for consumer protection on chargebacks, but that's a two-sided coin, right? You can protect the consumer, but a lot of businesses have problems because of fraud. So it goes both ways. Yeah, and I think another thing to note about today's money is that it's pretty safe in a US bank account, maybe not so much in other parts of the country, and most people in the world do not have bank accounts. So in the United States, money works pretty well, but in a lot of developing countries, there is a lot left to be desired.
Definitely. And as we continue this conversation, it's going to be a lot of fun looking at cryptocurrency, where a lot of people are very, very excited about utilizing new technology, utilizing blockchain to help areas of the world transact easier, or even in a private manner where they're able to engage in transactions without their government knowing or needing to know. So cryptocurrency, it's still relatively new in the grand scheme of how we look at money, from the idea and the concept to what it is today. So the question is, today, is cryptocurrency a good currency? And looking forward down the road, as we keep progressing toward the year 2025, will blockchain technology be really helpful in helping the world transact easier?
Okay, a lot there, right? So we need to look at today and then look at the future in 7 years in 2020-25. I think now is the time to move to the second segment of our show. How will blockchain disrupt currency? I'll start it out, man. I think that blockchain and cryptocurrencies will be superior to fiat money when it comes to speed and fees. By speed and fees, I mean the speed of a transaction, because as you know, bank transfers, checks, credit card payments, they don't have instant settlement. They take 2 to 3 days, take a while to settle. And fees for both the merchant and the consumer are going to be a fraction of a penny as blockchain technology develops in the future.
The big elephant in the room, and I'm with you on all that, Matt, is the volatility of cryptocurrencies. So whether it's Bitcoin, Bitcoin Cash, Litecoin, a privacy coin, it's very challenging to recognize tokens, coins, whatever you want to call them, as a currency when value can fluctuate greatly, whether it be in your favor and you feel as though that you have more purchasing power, or a lot less. And in some cases, 60-70% less than what it was worth during all-time highs in January.
For sure. And especially for people that are new to the ecosystem, let's just say, we go on a ski trip, Nick, with some friends, and I pay someone in Bitcoin in early January. And that $500, they haven't done anything with it. They don't even know how, because the infrastructure is being built to make it easier to receive payments, but they wait on it. And all of a sudden, 2 months, that $500 is worth $200 or $150. So there's no doubt that volatility is an issue right now. I think one area that we've already seen this work are international payments. So when you make a remittance payment, or just payment to another country, or to your family back home in another country, think a Mexican working in the United States, fees are high and they take a while. There's tracking. But with cryptocurrency, these payments can be instant. So even with a volatile currency, Nick, let's just say I'm in Colombia and I want to send Bitcoin to someone in Saudi Arabia. Instead of going through the banking system, which would take time and money, I could simply send them Bitcoin and they could sell that there instantly on local Bitcoins into fiat. So you'd still have to go back to fiat to mitigate the risk, but to cross borders, I think cryptocurrency right now is becoming a very attractive option.
I agree with you on that. It's a fantastic way to move money around the world. But as we progress in time, I'd love for there to be a day where the safe spot isn't fiat. So whether you're using Coinbase, GDAX, or Gemini, popular exchanges in the US, it's very easy for you to pay me, Matt, in cryptocurrency, and for me to sell at market rate and sideline the funds in stable fiat currency. There may be people in the world that don't have the luxury of banking systems being attached to an exchange for buying and selling Bitcoin or whatever cryptocurrency you've received payment in. So,
and Nick, I just want to add one thing there. That's true.
Sure.
But sites like Local Bitcoins and other OTC or over-the-counter exchanges allow people without bank accounts to sell their Bitcoin.
It's true. So you brought up a good topic, Matt, about OTC and local Bitcoin and finding people to exchange with. That's great. However, it's just a bit of a hassle today. It would be great where that was not a necessity to seek stability in currency down the road.
For sure. And I think to sum this up, Nick, and this is what I say to a lot of people, we give the internet 1996 analogy. You know this, man, running websites and e-commerce back in the day. We're lacking infrastructure with cryptocurrency. So it's not so much about how it is now, but how it will be once it develops in the future. So I guess when I try to debate the philosophy behind cryptocurrencies, we move from philosophy to pragmatism. Is it working? And that's usually my answer. That say, yeah, it may not be the easiest to use right now, but give it some time. And I think that will change going forward.
Hey, Matt, do you remember a day way back when people had credit cards and you went to a department store to make a purchase and they'd put a piece of carbon paper over that credit card, basically taking a snapshot of your account numbers, and you'd sign it, and then it would be remitted back to the credit card company or processor? Do you remember that?
I do. And Nick, actually, I rented a car here in Colombia a couple weeks ago. Renting a car in Colombia, that still happens.
So this just goes to show you that we were once at a point where we never pictured what point of sale infrastructure would look like and how much of a challenge it would be to build a gigantic network, let's say Visa, MasterCard, and have terminals in every point of sale location that people previously exchanged currency, paper money, or took carbon copy snapshots of credit cards. So it happened once, and it can most certainly happen again over blockchain networks.
For sure. Yeah, I think that's a great point. And also, we mentioned this in the beginning with the Venezuelan government. I think that cryptocurrency helps for store of value. It's not created by a state. It's an asset, right? Not a debt-based instrument, meaning that the US dollar is kind of an IOU, right? But having a hedge for a person, an individual, against their government in case their government makes poor economic decisions, or being able to own assets outside of your country. It mitigates some country currency risk. And the final thing I think on blockchain disruption is censorship resistance. And Nick, you're going to travel to Europe tomorrow, right? And maybe an American in Europe, you might be fine, but maybe not. I mean, there's been times where I've been abroad and my US credit card doesn't work. Your payment's been rejected, right? Your payment's been declined. I've had trouble with e-commerce on that as well. Nick, you might be on Amazon or Uniqlo or some electronics depot online, and they say your credit card has been rejected, but they're like, wait a minute, I do have credit and it's not working. Whereas a Bitcoin Cash transaction is a Bitcoin Cash transaction, and you can prove it. There's no way to dispute that.
Hey, Matt, I have a question for you.
Sure.
Have you purchased anything, a good, a service in cryptocurrency? And if so, I'm very curious why you chose to use cryptocurrency versus any other currency.
Great question. So I made 2 purchases last weekend. There are my favorite health food restaurant in Bogota accepts Bitcoin Cash, it accepts Zcash, Bitcoin, pretty much everything on the Jax wallet. And I really purchased there. The reason I made that purchase is because I want to increase adoption of cryptocurrencies. And I was with some friends, so I was like, check this out. It's on me. And look how easy it was. The transaction was pretty fast. So I did it more for awareness. It wasn't so much because it was easier, to be fair. Those are the last 2 I made. And then we went to a bar and I paid in Zcash for some drinks.
That's super cool. So for myself, I purchased a watch in Ethereum. And the only reason why I purchased in Ethereum was because the watch company, Kingsley, they produced a limited edition Ethereum themed watch, limited to 50 watches. And they are advocates of Ethereum, advocates of cryptocurrency, simply because it allows them to sell their watches internationally without the hassles of credit cards, chargebacks, things like that from international buyers. So I was happy to support that cause and purchase the watches. I've purchased art in Litecoin as well. So beyond those purchases, I haven't utilized cryptocurrency for day-to-day purchases simply because I haven't had a compelling reason to. And as they say, if it ain't broke, don't fix it. I've just had more options to spend credit cards where I'm getting reward points back versus cryptocurrency, simply because merchants need to adopt and accept cryptocurrency. So any merchant that says, we accept cryptocurrency, we're looking to increase the ability for people to transact using cryptocurrency, I'm a supporter of.
For sure. So I have to make a lot of international payments, Nick, and what they call it legalizing payments from US to Colombia. It's really a pain in the butt. And also a lot of e-commerce in Colombia is not nearly like the United States. I think a lot of people listening outside the United States will know that e-commerce can be very clunky. They charge very high fees to merchants. Sometimes it's easier just to make a transaction and there's a little bit less trust. And I love the idea of having a payment on the blockchain, a Bitcoin Cash or a Bitcoin payment, and saying, listen, here's the transaction record. It's here forever. Because a lot of times, Nick, you have to get like a photocopy of the bank statement and prove that this was your transaction. Being able to prove that you made a transaction is a lot easier using blockchain.
I agree.
Abroad, I should say. Nick, so let's move into the blockchain projects that are looking to disrupt the cryptocurrencies.
So obviously, everybody has heard of Bitcoin by now, unless you've been living under a rock. And I need to say that cryptocurrency as a day-to-day currency has received a bit of a bad name because of slow transaction speeds. I don't know if you remember the crypto kitties, Matt, with
Ethereum.
Yeah, with the influx of transactions happening on the Ethereum blockchain. It just wasn't set up for that amount of volume. So not too long ago, there were a lot of complaints with the Ethereum blockchain, more specifically when CryptoKitties, if you remember that dApp that came out, just increased volume on the network.
Yeah. And listeners who are not aware, what we're saying is the transactions were very, very slow on the Ethereum blockchain and it clogged the network. It took hours and hours for transactions to be approved. And we talked about speed as a benefit, but in this building of the infrastructure, that was a big problem. And with the Bitcoin core, and people had talked about this, the transaction fees got up to $40 or $60 and they were taking hours and hours and were delayed. And the North American Bitcoin Conference, look at the name, was unable to receive Bitcoin Core, BTC. And for nerds like us, we're like, yeah, but well, the future, it's going to get so much better. But for people's first experience, Nick, I know telling people that come to some of our meetups here in Colombia, they're like, yeah, I'd like just to put $100 in, right? Which you should be able to do. And I said, well, if you want to buy BTC or Bitcoin, at the time, I felt bad saying it's not a good idea because it may cost you $30, a $30 transaction fee.
During the height of the Bitcoin mania a few months back, it was just completely insane what transaction costs were. And more importantly, how long it took in time duration to move funds from one point to another. It just didn't work well as a currency.
Right. So we mentioned Bitcoin, and listeners, we're going to divide these cryptocurrencies into 3 categories. We call them the OGs, or the ones that have been around for a while: Bitcoin and Bitcoin Cash, and Litecoin. Then we have the privacy coins, meaning anonymous transactions. We'll highlight Zcash and Monero. And then the stable coins. Nick mentioned volatility. There are some coins out there that are trying to be stable, whether it's pegged to the US dollar or another fiat currency to combat the problem of currency volatility. And that's Tether and MakerDAO. But Nick, tell us a little bit about Bitcoin Cash.
So Bitcoin Cash, and you could probably speak more to Bitcoin Cash than I can, given your arrangement with Bitcoin.com. Bitcoin Cash is what Bitcoin should be and should have been all along, in my opinion.
Yeah, and listen, the whole idea is Bitcoin Core, they're making attempts with the Lightning Network and some other advanced things. And we won't go into technologies, but the Satoshi's white paper is just peer-to-peer money. And that's what Bitcoin Cash is aiming to do, to keep transactions fast and keep them cheap. So Bitcoin Cash, I'm sure you've heard of them, obviously. And the original, this is a digital currency, censorship resistant, a limited supply, and they've been around for a long time. So keep in mind, there's companies, not just companies, but FBI, Europol, that are able to trace blockchain transactions because the blockchain is a public ledger, meaning you can look at anyone's Bitcoin address, just like a puzzle or a detective, you can put things together, and criminals have been caught this way. Some people think, hey, that's dangerous. If people can track my Bitcoin address, then not just for illicit reasons, some people want privacy in the transaction. So there's some privacy coins that are trying to solve that, meaning they're anonymous with their transactions in terms of how much you hold and how much you've spent. So Nick, tell us a little bit more about Zcash and Monero.
So I like both those projects. I really like Monero. It has a really good developer base. It has a good following. I look at Monero as the brand, like the Bitcoin of privacy in that sector. So the need for privacy coins, you touched upon it. It could vary from a journalist looking to send payment in exchange for information where they don't want to compromise their identity, or it could be for any reason where a person just does not wish to have prying eyes on their transactions. So for me personally, I don't really have a need to be utilizing a privacy currency for day-to-day purchases, but as a speculator, and I've traded both Zcash and Monero on exchanges, I can see why there would be demand, especially in other areas of the world, to utilize a cryptocurrency with enhanced privacy features.
Right. And we talked about corrupt governments. If the police know that I'm holding a lot of Bitcoin Cash or Litecoin or Bitcoin, that could be a problem. And it's worth noting that just because they're privacy coins, you have to have a lot of experience to, using Tor and other features and protect your computer, protect your phone to really be anonymous, because just owning Zcash does not mean it's anonymous. And I think that's worth noting. But yeah, I would say privacy coins are a bit further behind than maybe Bitcoin Cash and Bitcoin because they're trying to add another layer, not just be on a blockchain, but be completely anonymous. Another use case I see for that, Nick, is businesses. So Nick, let's just say you and I are rival electronic companies. And as you know, with like Samsung and Apple, there's all these battles. I might be buying from a manufacturer. I may not want you to know who the manufacturer I buy my X chip from, right? So if I want to buy computer chips and not let my competitors know, a privacy coin would be very helpful for that. So listen, people always talk about illegal use cases for privacy coins. And just like art, as we talked about, just like cash money, as in physical cash, it will be used for illicit, but there's many other use cases. And I think sometimes as a way to discredit cryptocurrencies, they just say privacy coins equals money laundering. And this is just not true.
I agree. There's use cases for criminal activities the same way that there are many, many use cases, arguably 1,000 to 1 in a ratio, favoring day-to-day transactional purposes or exchange between business.
For sure. So we got the privacy coins, aiming to be anonymous currencies and protect the people using it. And then, Nick, I want to go layman's terms here because this is the most, I'd say, technically complex one. We mentioned the whole problem with Bitcoin's worth 10,000 a day and 2 months from now it's worth 5,000. You've lost a lot of value. Tell us what a stable coin is.
One of the biggest challenges in cryptocurrency today is the volatility, without a doubt. It's been so much fun speculating for me, again, coming from a place of bias because I've made a ton off trading, buying and selling at the right time. But there may be a lot of people who came in these markets in December, in January, and felt very enthusiastic about the future of money, the future of currency, only to realize that they're down 60-70% from where they purchased because they're still looking at the US dollar as comparing apples to apples. So let's talk about stable coins. And I'm going to put that in air quotes right now, stable coins. Stable coins provide stability, and let's just use that term, in this chaotic ecosystem of cryptocurrency we know today of wild volatility. So let's take a look at Tether. One Tether equals $1 US. That's the stability everyone in this cryptocurrency craze right now is seeking. They're looking for stability without sidelining funds back into US dollars or whatever fiat currency they may be utilizing, the traders. So Tether, I believe it's artificial to a certain degree. It's man-made. It's trying to create stability in a beautiful market, which is somewhat volatile right now. Because it's so new, it's still in its infancy, and Tether works when there actually is money in the bank or funds that can back it up. So until we know what the status of that is, and that's a whole other story for a whole other episode, Tether simply is pairing one Tether per $1 US, or whatever the local fiat pair is that you're trading.
And listeners, I think the big issue with stablecoins right now, it's very technically complex. So just because you say your coin will always be worth $1 doesn't mean in the real world that it will be worth $1. Now let's talk about the use cases for stablecoins. To me, it's obvious, the restaurant or any type of store owner that says, I'm not an expert in cryptocurrencies, but I'd like to get paid in cryptocurrencies. But I don't want to, if I'm selling $5,000 to $10,000 worth a month at my restaurant in crypto, I don't want to all of a sudden have those funds cut in half or need to be watching the market. I just want to receive it. So if a stable coin worked, they say, okay, we can receive crypto, to our crypto wallets, Tether. There's also MakerDAO and a few other ones out there. But the ability to not have to worry that there'll be any more fluctuation than you would have with the US dollar, which fluctuates much less than the average cryptocurrency.
So Matt, do you remember the episode where we talked about debit cards and crypto debit cards on the blockchain?
I do, yeah.
What's interesting about that episode, and it's all coming full circle right now, is that you can utilize those payment networks, Visa, MasterCard, to accept as a merchant funds from someone paying in crypto, and the transaction happens pretty much instantaneously all at the same time. Where I'm going with this is that sometimes you need different tools to get different jobs done. And I really believe that elements can really complement and play nice with one another, where we don't have to have hard and fast rules that everything must be blockchain and let's destroy Visa and MasterCard's networks. I think there are certain transactions that just lend themselves better to utilizing a cryptocurrency. There may be some other transactions that lend themselves better to utilizing a credit card. And heck, Matt, there may be some local transactions here in my area of South Carolina that I just want to do in cash. If I'm buying something from like a local Facebook group and they don't have a Square reader, I think that's the name of the company, right? Square, that processes on the spot, where I just want to use cash. So different tools for different applications, but it's undeniable that cryptocurrency is playing a bigger and bigger role as we progress.
For sure. And that's a great point. Let me give you another example. So Uber and taxi. Sometimes it makes more sense to take a taxi for some people, and it's all over the world. It's different in every city or country that it's in. But the fact that Uber is there as competition has made taxis better, right? And I think after the 2009 financial crisis and everything that happened, just having the option, just the choice, the free choice, and I can use a currency that's not my government. Maybe that will make fiat currencies a little bit better. They'll be a little more accountable because there's additional competition. And I think that's pretty interesting from a competitive standpoint and how that affects the end user. Another thing I like to say is that I just see this as programmable money, meaning that using the blockchain, a lot of state-based currencies will try to be on the blockchain, and a centralized cryptocurrency I'd say that's another episode as well. But I find it entirely positive that Bitcoin has been invented and putting bankers on their toes.
I agree. And let's stretch currency as we know it a little bit. So think big box retailers. You can buy gift cards, right, Matt?
Right.
What's interesting is that the issuer, the store, the big box retailer, is essentially printing their own currency. Now, that gift card can only be redeemed at that location. So I'll break it down. A Best Buy gift card cannot be utilized at Baskin-Robbins for ice cream. It just doesn't happen. So we're familiar with this concept of currency and it being tied to a very specific use case, that being Best Buy. So it's possible for everything, and I know that's very broad, but gift cards, perfect application for the blockchain. Now, that could be a whole other episode, Matt, talking about gift cards, but I know because I've done extensive research on that industry that gift cards are hard to track. People lose them. People don't spend the full amount, causing breakage, and that causes all sorts of accounting issues. Interesting things about gift cards, they sometimes expire, and that could all be programmed into a smart contract to self-expire if the money needs to be burned. And that happens with certain token projects. But everybody already is familiar with this concept of redemption and specific retailers or locations where those coins or gift cards can be received.
Yeah, I love the gift card use case. And listeners, without going into the technical part, blockchain and smart contracts could just make it easier, cheaper, faster, and better accounting and more liquid assets. So I want to give you another use case, right? I'm going to go back to the developing world, is being a refugee. So what does the typical refugee leave their country with, Nick, when they get to the border?
Well, I have no idea. That's interesting. I never thought about that. I don't know, maybe some basic consumer products, some cash. I don't know.
Maybe. And so here's the thing. And I've seen real world use cases with this in Venezuela, but this has happened for years where people from all parts of the world have had to flee their countries. When you flee, you have to pay the guards to get out, right? You have to pay them money. And that won't change with cryptocurrency if you have to pay corrupt officials, but they're also going to inspect your bag. You think you can leave Venezuela with $10,000 worth of gold bars in your bag? No, they're going to take it. They're going to take every last penny you have. But there's some web developers and graphic designers that have been able to leave Venezuela and go to Miami or Panama. They've traded all the money they've earned. They've bought Bitcoin. They get to the border. They're without a penny on them, right? Or they appear to be. And they get to a new country. They have this, I want to say international. They just have this currency that no one owns, Bitcoin. And they're able to sell it on local Bitcoins and start a life. So instead of giving up your last $10,000 because you can't get it across the border and you have that risk, you have $10,000 or $20,000 of savings when you get to a new country to begin your life. And I think that is an amazing thing.
Oh, that's beautiful right there. I love it. That's freedom, really. And I think when it all boils down, cryptocurrency as a currency means freedom for a lot of people.
Yeah, and I think that's a great way to end this season. Freedom, choice for people. Think about it. Maybe you're okay with fiat currency, but I think cryptocurrency has a lot to offer. And listen, this was a great season, Nick. I really enjoyed doing this with you. And I want to ask listeners, first off, please subscribe and share this show. It helps us get it in front of more people on iTunes or wherever you get your podcast. And two, reach out to us. Go to Bitcoin.com/podcast. And if we have suggestions for season 2, as soon as Nick gets back from his trip, we're going to start recording. So send us some industries you'd like to hear covered, and we'll consider using them in the next season.
Yeah, this was a lot of fun. I'm really looking forward to finding more industries where blockchain will enhance the industry and we can prosper as a society. And Matt, I'm really looking forward to seeing these markets rebound. It's not a matter of if, it's just a matter of when right now.
I feel the same way. Well, all right, that's it for season 1. And we'll be back in 2 weeks with season 2.
Thanks for listening to the Bitcoin.com podcast network. To learn more about our shows, visit Bitcoin.com/podcast. Bitcoin.com podcast network.